credit limit. Hi, Charmin here with the Credit Repair Insider, brought to you by My Credit Medic. 25% of Americans have a credit score of less than 600, which puts them in the category of having bad credit. Now, whether this is due to job loss, poor money management, or simply taking on more than they can chew, they are forced to live with the challenges of having bad credit. That number is up 15% since America was hit with the worst recession in decades. That means that 1 in 4 Americans will not be able to borrow money for major purchases. Now, if you are like many Americans, there is some confusion on what exactly a credit score is, how it is calculated, and how it is used. For starters, and I cannot stress this enough, the 3 numbers that make up your credit score are probably the most important 3 numbers you have next to your Social Security number. In today's video, I will be discussing the credit score. The first thing that you need to understand about the credit score is that it was never created with the consumer in mind. The second thing that you need to understand, that is big business in America. Credit reporting agencies, banks, and bill collectors all profit from you having a low credit score. The credit score was first created in the 1980s for banks and lending institutions as a scoring system to decide on a consumer's creditworthiness or likeliness to default on a loan. Although there are many different types of scoring systems out there, and it does vary from agency to agency. By the way, that's why it is important for you to monitor all 3 of your credit reports, because you actually have 3 different credit scores. The most common system out there is the FICO system, so that's the one that I will be discussing today. How FICO, F-I-C-O, is compiled is a mystery, but it is the secret ingredient of the credit reporting agencies. They sell this information to every bank, lender, insurance company, utility provider, or anybody else who wants it on the market. In turn, this score is used to decide whether you are approved or denied, the interest rate that you will receive, or whether to charge your deposit. By now, you should be getting a good understanding of how this game is played based on 3 numbers. The FICO score is a collection of your credit history over time based on the FICO model. The score ranges from 850 to 300. The higher your score, the better your credit score is, of course. Here's a summary of how your FICO score is calculated. Payment history, late payments, and missed payments make up 35% of your FICO score. Credit to debt ratio makes up 30%. What a credit to debt ratio is how much is available against how much you owe. Say, for instance, you have a Visa card and you owe $9,000 on it, but your credit limit is $10,000. You have a high credit to debt ratio. Coming in at 15% is the credit history, and 10% each is new credit and credit inquiries. FICO only looks at the information contained on your credit report to compile your score. Lenders look for a healthy mix of credit when approving loans. We will discuss that in detail in another video. But for now, there are 3 major credit reporting agencies: TransUnion, Equifax, and Experian. They all use a different model to compile your credit score. Now that I have covered the basics on what a credit score is, let's take a quick look at how it affects your life. Having poor credit affects your ability to buy a house, a car, rent an apartment, get credit cards, cell phones, or other utilities in your name without paying a deposit. It may even affect your ability to get a job. But the good news is you can repair your credit by increasing your score. Did you know that the average credit score contains outdated, erroneous items on it, keeping your credit score low? As I said before, the name of the game is to keep you in debt. By federal law, credit reporting agencies are supposed to monitor your credit files and remove all outdated, erroneous items from the report. But the truth of the matter is they don't, because they profit from it. And if you try to get these items removed, you hit a brick wall. Fixing bad credit is a simple process, but it is tedious and time-consuming, and what you don't know can hurt you. If you are like many Americans, your score can use a boost. There are countless companies out there claiming to have a quick fix to raise your credit score, and they charge you thousands of dollars for their services. Some even use illegal tactics. The truth of the matter is, you can do it yourself. In fact, the FTC recommends that you do it yourself. But be aware, if you choose to do it yourself, the credit reporting agencies have roadblocks in place to deter these efforts. Most dispute letters sent to the credit reporting agencies are dismissed as frivolous. The reason for this, dispute letters are written using templates or software. So when the credit reporting agencies receives one of these letters, they dismiss it. And the process starts all over again, costing you money month after month. Who has time for that, right? Then leave it to the experts. My Credit Medic offers an affordable, simple, proven method to legally repair your credit in 3 simple steps. Step number 1, we restore your credit by using personalized dispute letters. No credit situation is the same, so no dispute letter should be the same. Step number 2, we help you build your credit with resources and tools. Step number 3, we show you how to maintain this credit using tips and tricks. What can be more simple than that? That's mycreditmedic.com, and stop struggling with bad credit and get on the road to good credit. I'm Charmin Woods with the Credit Repair Insider.